going high. Riding the wave, I'm here to stay. Living in the digital age. No banks, no fees, just decentralized. It's crypto paradise. Ooh. No banks.
Alrighty, let's kick this thing off. Good morning from Paradise Surfers. My name is Crypto Amaru, joined as always by Nick the Crypto Hitman, and it is Thursday, March 19th. The month is flying by, and when you know it, Bitcoin's crashing, gold crashing, silver crashing, oil's pumping. Powell didn't cut rates, retail's panicking, and yet, the institutions are loading up like mad. The Ethereum ETF buyers are making the ETF-B, the staking ETF, one of the most successful products coming out of BlackRock, ETF products, in the past few years. The institutions don't seem scared. The ETF buyers don't seem scared, and yet I'm seeing the fear index. We already dropped back down to, what is it? We're damn near 20 again, under 20. Make it make sense. Make it make sense. I guess retail's scared of the war, and institutions are looking past it. That's my take. But before we get into all that, I want to say what's up to Nick. Maybe we can jump into some charts. How was your day off yesterday?
Pretty good. I just had to do a bunch of running. That's why we didn't do the live show yesterday. But still looking at the charts. We didn't miss much. We would have went live just to say, hey, it looks right. It looks like it wants to go lower. And what do you know? It came on today. The lower we go as we go down to the next moving average. We'll pull up a couple charts here just to show you guys what we were talking about. The Ethereum chart continues to look better than the Bitcoin chart. Here's the Bitcoin chart we've been talking about, wanting to consolidate in the moving averages and break to the upside. That is exactly what happened as the yellow 200 moving average has formed a rounded bottom. But now Bitcoin has given up most of its gains, falling below the 300 moving average and sitting right on top of the 200 moving average, a critical level for support for the bulls. Now, the positive thing here is, yes, you still have a couple $100 to spare. Also, you are seeing oversold readings on the RSI, and the technometer has reset to neutral, which means that the low or another major low could be in, which would be a higher low. So I want to see this break up, obviously, because I don't want to repeat of up here where we had this nice grind, higher low, higher low. You break out of a bullish formation. Right when we're breaking out of bullish formation, Greenland Fund, World War III Fund. Right when we're breaking out of bullish formation, now we have no interest rate cuts, Israel and Iran bombing each other, and warfare. I mean, it's crazy and uncanny, the timing. Every time for the past 6 months, Bitcoin and Ethereum has had a bullish breakout. Some kind of FUD storm or black swan event has happened to kill and damper that price action. That leads you to believe, is the charts painting the news, or is the news painting the charts? We don't really know. And what I know about Ethereum looking better than Bitcoin, here Ethereum is still holding the all-important 300 moving average, still with about $50 to spare. We got this rounded bottom on the yellow moving average as well. RSI not completely oversold just yet. Technometer is neutral. So this is the levels in which you want Ethereum and Bitcoin really to hold, plus or minus $50 to $100. They could drop a little further here as the traditional stock markets are opening and still be okay. But very important levels for Ethereum and Bitcoin if they're going to follow the technical analysis we've been predicting here for the past couple weeks with these moving averages and the breakout that we just saw.
I mean, I'm not a trader, I'm not a technical guy, but I'm looking at this chart, and we did hit that low of, it was around $1,800 Ethereum end of February. And look, we've been putting in higher lows ever since. That chart doesn't look too bad to me. We're still putting in higher lows since that big crash. Guys, things could be a lot worse. We have a war in Iran right now. Look at what's happening with gold, silver. They're absolutely getting crushed. And yet, Bitcoin putting in higher lows, Ethereum putting in higher lows, even the S&P 500, even NASDAQ. I know they're off their highs, but they're still pretty damn close. I mean, things could be a lot worse for our risk assets. Powell yesterday doesn't cut the rates, goes out there pretty hawkish. I watched the speech. So look, things could be a lot worse for our risk assets. I'm looking at that chart, man, putting in higher lows ever since the that capitulation event we had end of Feb. I don't know. I'm not feeling too bad despite everything.
Yeah, this is what we talk about. We want to see gold and silver consolidate, but we don't want to see gold and silver waterfall. When that happens, you get uncertainty in the markets. That's why Bitcoin and Ether are down a bit. Nasdaq is down 1%. And look at the waterfall in gold. Gold, the flight to safety. Holy cow! It's still so cheap, and it's just completely almost gone all the way back to the capitulation number back in January 30th. Now remember, when this capitulation event happened, Bitcoin didn't go up. This spooked Bitcoin and Ethereum as well. When did Bitcoin go up? It went up during this consolidation. So we would like for gold and silver to find their footing, consolidate for multiple months here, and allow Bitcoin and Ethereum to continue to put in higher lows and have liquidity rotating to those assets. When you have big waterfalls like this, all this does is dry up liquidity and spook out the markets. Nobody has a good chance to get bored and rotate into other assets. So we'll see. That's pretty crazy to see gold with that waterfall effect. Meanwhile, oil prices not doing all that much, even though 2 oil fields were bombed overnight. Oil to $95.50. It was $93.75 yesterday, something like that. So up maybe $1.50, $2 since yesterday. Just went up to $96.96. So just went up another $1. So now you're up $3 in the past 2 days with 2 oil fields being bombed. So I think the downturn in the markets we're seeing is kind of a proxy of the hawkish talk from Powell, but also predominantly the escalation from Israel and Iran and targeting oil fields, I think, is greatly impacting the precious markets, the stock market, and that is bleeding over to Bitcoin and Ethereum. What's your thoughts?
Yeah, that's probably why we've seen the big sell-off on gold and silver. Just a lot of uncertainty right now around the war and what happens with oil and so on and so forth. I'm looking past it, though. I mean, what are the chances that this persists for months and months? That's kind of how I look at it. I mean, I'm still... Look, am I dismayed that the Israelis hit that oil field and kind of escalated to, attacking oil infrastructure? I mean, yes, because that potentially prolongs things and hurts the energy markets and hurts our beloved risk assets. But I still maintain that Trump could end this tomorrow. I don't think he's going to end it tomorrow, mind you. I think he's going to finish the job, and we may be in it for another couple weeks. Now there's talk around deploying 2,000 plus Marines to Karg Island and taking over Karg Island. I don't know if they do that or what, but the point is, I think if you go in and you do what the U.S. did with Iran, you kind of have to finish the job. Last thing you would want is, they maintained a bunch of their capabilities and can still shut down the Strait of Hormuz at any moment in time. Like, we can't have that. So finish the job. Hopefully that doesn't take more than 2 weeks. 2 more weeks, maybe less, we'll see. And then I think everything stabilizes again. So for everyone's panicking, oil's going to be above 130 for the rest of the year. I'm reading this stuff from the mainstream media. I just don't buy it. I don't think that's how this plays out. Could I be wrong? Sure. Maybe this does persist for much longer than we're expecting, but I give it another couple weeks and the things normalize again, guys.
Well, I think this is also what's impacting the markets is the market for Fed's future decisions, the one in April and even the one in June, have drastically switched for those who are looking for liquidity and for the bulls. A big drop-off and percentage chances of decreases. Remember, it wasn't long ago that there was like a 30% chance of April 29th being our next interest rate cut. Right now, there is a 1.9% chance. That is lower than them actually increasing rates by 2.5%. That is a massive switch. That is pretty crazy. And then in June, we have the new Fed chair in power, but that has dropped massively as well. Only a 12% chance of a decrease in interest rates and a 4.1% chance of an increase. Again, this has fallen off dramatically. This was like a 60% chance of a cut happening in June with the new Fed lead, and now that's only down to 12%. This definitely isn't helping risk on assets. This definitely isn't helping the markets with the future outlook of even interest rate cuts now flipping so bleak here on Polymarket.
Again, I think this is just a proxy for the conflict and people's concern that it may persist longer than we all want it to. Oil prices stay elevated for many months, and then surely that is going to be an inflationary shock, which would take any interest rate cuts completely off the table. And then they maybe start talking about interest rate hikes. But the bettors, I think, here on Polymarket, they're getting trapped in the moment. They're assuming that this war is going to persist for another few months. And again, I just don't see that happening. Trump is already trying to de-escalate things, particularly around the attacks on any oil fields. He put out a statement yesterday, hey, I didn't sanction this attack from the Israelis, and if the Iranians keep attacking oil fields, they'll be held to pay, blah, blah, blah. So he's trying to de-escalate a bit. I think this thing lasts another couple weeks, and then oil markets stabilize, and we get a big crash on oil prices, and this concern around inflation goes away, and then all the bets that you see on Polymarket, oh, they're going to raise the rates. I think that goes away too. So if people are getting caught up in the moment, they're getting carried away a bit. I did watch the presser from Powell yesterday. I mean, it wasn't particularly dovish or hawkish in my opinion. I mean, he basically said we're living through this uncertainty with the rest of you guys. We're being data dependent. We're not expecting any inflationary pressures to persist if this war ends relatively soon. But if it goes on for longer, then yeah, sure. But we don't know yet. So we're just holding pat, and we'll see what happens. And by the way, he said the labor market, there's some concerns there, but doesn't look too terrible. Unemployment is kind of neutral. So I don't know. I didn't take away too much from Powell in terms of, oh, no, they're definitely going to be raising the rates end of this year. It's going to come down to the war, guys. And I think this thing ends in a couple weeks.
Talking about data, let's look at some positive data. We've been narking on the negatives on why we're seeing a sell-off in gold, in silver, in stocks, in crypto, in Ethereum, and what's been driving that. Well, here's some positive information. Crypto market momentum is accelerating. Maybe prices is not, but what we are seeing in the institutional fund land is. Crypto funds recorded plus 1.06 billion in inflows last week, the highest since the third week of January. This marks the third consecutive weekly intake, bringing the total to plus $2.8 billion. This now recovers most of the negative $3.9 billion of outflows in the prior 5-week selling streak. Bitcoin ETFs led with plus 793 million, making up 75% of the total inflows, bringing the 3-week inflows to 2.2 billion. Ethereum saw plus 315 million, bringing year-to-date net flows close to zero, meaning that there has been a net outflow for this year during this downturn. That is now almost back to neutral with the launch of the ETHB product by BlackRock. We'll see that in another post on how well that is doing. Since the start of the Iran, total crypto ETF assets under management have risen plus 12 billion or plus 9.4% to $140 billion. Investors are returning to crypto despite the geopolitical turmoil. We talked about that 2 days ago, that the best performing assets since the Iranian war broke out in this geopolitical turmoil has in fact been Bitcoin and Ethereum and some crypto assets, which is pretty crazy to see because what you've seen in the news is silver and gold, but really gold and silver peaked before the turmoil, and when the turmoil has been going on, it is now lower than it was before. So that is interesting to take note of. What do you think about the weekly asset inflows? Obviously, they can always get pulled out. You can have outflows as well. But even on these depressed prices, when there's no real retail FOMO, no real market FOMO, or sector FOMO, assets are flowing back into these markets.
Smart money's buying the dip, as smart money does. Not just Wall Street, not just the ETFs. We're seeing now whales jumping back in. Eric Voorhees, he's a Bitcoin OG. He's buying a bunch of Ethereum the other day. There was a few other Ethereum maxis buying a ton. Bitcoin OG, some are selling, but there are a lot of buying as well. And then, of course, tons of inflows from these ETFs. So, yeah, dip buyers are here. They're looking for value. They're seeing Bitcoin is highly undervalued relative to every other major asset class. And they're positioning themselves. Good for them. Smart. It's just funny that retail's sitting sideline. They're scared. You got 4-year cyclists thinking we're going to 40,000. And yet here are the most sophisticated investors, the deepest pocketed investors, deciding to buy the dip. So, take it for what you will. I'd rather be positioned along with the Wall Street types than following random anon PFP guy on X who's telling us it's going to 40,000. Oh, you're muted, by the way.
I said amidst the red candles, nobody's really tuning into anything. We're at 47. Normally, we're well above 100 by now, this far into the show. I know it's only been 19 minutes. But Randy Hipper, usually in the 200s, only at 22 people watching her live. Red candles in the market means people want to tune out. They think there's no opportunity. They think the bear market is coming. But BlackRock just pulled 149 million into Ethereum ETFs in a single day. March 17th saw 138 million in net inflows. And BlackRock took almost all of it. And it's predominantly this Ethereum B staked version of the Ethereum ETF that we talked about, 67.17 million. And ETHB has pulled 140 million cumulative since launching. I think there's an incentive for the first like 2.5 billion in assets to go into that. So still a long way to go. But people are liking what they're seeing there, and I think that only grows as the Ethereum price is going up, because then people are like, wow, I get the upside objective of Ethereum, the upside possibility, but then I still get the 2.5 to 3.5% dividend yield on top of it paid out directly to my account. So I think this trend continues. I think ETHB will grow larger than ETHA, and I think it's very bullish for the crypto assets due to the 45-day staking period and 45-day unlocking period that allows scarcity and supply and demand to really kick into effect.
I think ETFB is going to be a massive success for BlackRock and great for Ethereum holders and industry as a whole. So I'm very happy about it. It has product market fit, right? The fact that it launched and did as well as it did, even despite the geopolitical turmoil, wars, blah, 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 got this much inflows in this few amount of days. This shows me that the market is responding favorably to it. There's product market fit, and it's going to continue to draw inflows. I think particularly, like you said, once he starts to pump again, hopefully war ends soon, people get risk on again. It's a brilliant product. You get the upside of the Ethereum asset, and then you get the dividends. So kind of best of both worlds. I think it's going to be a big winner. Happy for this launch. Yeah, man, I know everyone's probably feeling pissed off right now. Oh, market down, crashed again. I don't know. I'm not feeling that bearish, just because it could be a lot worse. It could be a lot worse right now, and things aren't looking too bad from my standpoint.
Ethereum's trying to hold those levels too. 300 moving average having a bit of a bounce right here, right now. Let's see if that can follow through.
How's the rest of the stock market looking right now? Are we up? We down?
Stocks were down 1% when I look. Nasdaq is down 0.64, so it is bouncing about 0.4% off the lows. Let's see, SPY is only down 0.5%. That was down 1.1% at the beginning of the show. And then the Dow Jones, where's that at? Is down 0.44%, so actually performing better than any of the other indices. So it makes sense why we're seeing a little bit of a bounce in Bitcoin and Ethereum, because we have seen about a 0.5% bounce in the stock market itself. If you're looking at crypto-related stocks, BMNR down $1, down 2% on the day. SBET down 2% on the day. And MicroStrategy down 2.5% on the day. Pretty big numbers. Underperformance for crypto stocks, overperformance for crypto as a whole. And the stock market is trying to go from deep red to try to flip green.
I'm telling you, man, it could be a lot worse. It could be. We're got oil damn near $100. People are filling up their tank for like $3.50, maybe even $4 around where I'm at. That's not even including what's going on in Japan and China. They're really struggling right now, apparently, because they don't produce as much oil as we do. So they're under a serious energy shock. Things could be a lot worse for risk assets.
You're talking about being worse. Polymarket thinks there's a chance of it being a lot worse. Breaking news, the bears are back in action, putting all their fiat currency they got from selling crypto and dumping it into Polymarket. Bitcoin is now projected to crash below 45,000 by the end of this year with a 51% chance, saying Bitcoin will dip to 45,000 or less by December 31st, 2026. If this was to happen, then the 4-year bear cyclists were correct, because in theory, if the bears are correct, that means we would probably find a low of 40 to 45,000 by October of 2026. Yes, a Bitcoin drop from here to 40 grand by October of 2026. That is the 4-year cycle. That is the bears' projection. And now the bears are putting their money where their mouth is and betting on Polymarket.
Well, again, I think this is indicative of the dichotomy, the difference between retail and how they're viewing the market right now, and institutions and how they're viewing the market right now. Obviously, this is a stark example, but you also have fear. The fear index, that gauge slipping, I think, below 20 for the first time in a long time. You have a bunch of voices on X constantly talking about, $40,000 Bitcoin 4-year cycle, blah, blah, blah. And apparently more of retail thinks that we're going to hit $45,000 by the end of this year. 51% of people believe that. So, and meanwhile, of course, Wall Street's buying, ETFs are buying. Clarity Act looks like it's going to get passed. By the way, the SEC actually preempted the Clarity Act and sort of just with their own internal rules and guidance essentially pass the Clarity Act into law through regulation. They did that a couple days ago. So I don't know. I mean, again, do you want to follow the retail and their sentiment and their beliefs, or do you want to position yourself with the big money?
Well, that's
I'll
what I was
stick
going
with
to
Wall
say.
Street.
Meanwhile, while this is happening, we got AJ West in the building saying good morning. We got Wyckoff on crypto talking about smash the like, share, and subscribe buttons. And Cookie Dev saying he wants to bet against this. You know who else is betting against this? Like, how do we get to 40,000, 45,000, have the traditional 4-year cycle, have a major market low in October of 2026, which means we suffer for another 6 months from right here, which I guess isn't the end of the world, but we don't want that to happen. Meanwhile, institutions are now buying 3x more Bitcoin per month than miners can produce. Last time this happened, Bitcoin doubled in 4 months. And let's not forget about Ethereum and its inflation. All that inflation is being bought up, and the people who are staking to earn that inflation, most of them, Bitminer, Sharplink Gaming, Coinbase, aren't spending that inflation. They are compounding that inflation into more stakes. How do we get to $40,000 Bitcoin? And meanwhile, these institutions are buying 3x more than miners even have to sell. And we know some miners aren't selling.
Yeah, that's what I've been saying, why the 4-year halving cycle doesn't make sense in this new environment of institutions, of MicroStrategy, of ETF buyers. Everything's changed because the asset class has changed. It's appealing to a new class of investors. So it's not the same, Bitcoin whales and OGs just controlling the price and the miners. There's a whole new class of buyers coming in. So I just don't see how the 4-year cycle is going to mirror exactly how it did the past 3 times. At some point, you have to accept that change is inevitable, guys. It was not going to, you think the 4-year cycle was going to repeat forever? At some point, it was going to break, and I think it's already broken, and we'll see that by the end of this year when Bitcoin is at all-time highs, above previous all-time highs, and not anywhere near $45,000.
Yeah, we'll see. Right now, the Bears are winning. That is for sure. But again, it comes down to really that poly market bet. They have it. They're giving themselves a little buffer. They're saying by the end of 2026, really, in theory, it needs to happen by October for the exact 4-year cycle to play out again. That's what people are talking about. As soon as we saw any red candles, the Bears are silent. We saw red candles. I got like a plethora of chats, notifications all saying, uh-oh, 40,000 by October, traditional 4-year cycle. We'll bottom in October, then we'll moon for the next couple of years after that. It's funny how some candles bring people back out of the woodwork. But again, we shall see. If we break to new lows, Bears are in the right direction. And if that poly market plays out, well, 45,000 by December is pretty in line with the 4-year cyclists believe, which is 40,000 by October.
I mean, you have to look at the facts on the ground. You have to look at reality as it is. And the reality is you have Wall Street buying a ton, Michael Saylor himself buying a ton. I mean, through the stretch product, it's insane. I think over $2 billion he's bought worth in the past couple weeks because of the inflows on the stretch product. ETF buyers, other institutions, right? So I just don't see a world in which we hit 45,000. Well, we'll see. But yeah, obviously, look, when the fear increases and you see some red candles, the bears coming out and they're blowing their trumpets. Conversely, when it's green candles, us bulls start banging our drum, so to speak. So it is what it is. That's just how the market is, guys. At a certain point, we're gonna know without a shadow of a doubt that the 4-year cycle is dead. I guess it's gonna take until October. If we don't hit 45,000 by October, then I think they'll have to admit that they were wrong. So 6 more months to fight these bears.
Really, there's just this big gray area because really, to break the 4-year cycle, you need to know by October. If we get to $40,000 or $45,000 Bitcoin, you guys win. But bulls can't be confirmed unless we extend to higher highs. So we need to break 126,000 before October. And or when October and December start rolling around, we're in that $110,000 range. Market structure's looking pretty good. Ethereum is outperforming Bitcoin. So in theory, Bitcoin can go to 110,000. Ethereum can be near or at new all-time highs. And then I think the bears have to say, okay, it wasn't a true 4-year cycle. Hopefully they redeployed some capital. Hopefully they didn't redeploy, so they got a FOMO and buy higher. But, it was a short-term blip in the markets due to black swan events, normal dips in bear markets. Now, this one wasn't deeper. The normal dip in a bull market is like 35%. This one got as low as like 50%, and partially due to the black swans going on, the uncertainty, and that tug-of-war between 4-year cyclists and the 5-year cycle ISM theory. So that's maybe why we got a little deeper with that bull market drop. But again, all that kind of goes out the window if indeed we do drop to that 40 to 45K level. So it's just this big gray area of who's right and who's wrong. And nobody knows who's right or wrong until we get to later this year and we break out. or we go down to those doomsday $40,000 levels. It would be hard to believe that institutions would have pie on their face like they do already as they continue to accumulate. And they're producing more buys than miners are producing new Bitcoin. They're producing more stakes on Ethereum than Ethereum inflation is being produced. So it's going to be hard to see how we go lower. But again, black swans can happen. Anything can happen. And we'll see what happens here. 5 years of consolidation for Ethereum tells us it's going to break out higher, not lower.
I'm with you, bud. Two things I think are going to happen in the near term, which is going to cause Bitcoin, crypto, ETH, etc. to explode. One, the war is going to end. This is not an endless war. This isn't the next Afghanistan. We're going to be in Iran for 10 years. Oil prices at $150 a barrel for 10 years. No, this is going to end in a couple weeks, guys. So calm the F down on the war stuff. Second thing that's going to happen, people aren't talking about this nearly as much as they should, but the big, beautiful bill tax refunds. I just read something. Something like 180 billion is projected to be refunded to Americans through the big, beautiful bill.
Wow.
By May? $180 billion? Maybe we can verify that. I got to maybe do a Google search real quick because it was just an analyst talking about it, I heard. 180 billion, if that's true, and that's coming into the economy by May, obviously not all of it's going to flow into risk assets. We don't need it to. Where you want it to go is just spread throughout the whole economy. Get that ISM ticked up. Get the manufacturing numbers ticked up. 52, 53, 55. Let's get the ISM to those numbers. Obviously, some will go into risk assets as well, I'm sure. Some money will flow into the stock market and crypto. But if 180 billion is actually coming into the market by May, courtesy of the big, beautiful bill, I just don't see that getting priced in right now. Maybe that's what Wall Street sees. Maybe that's why Wall Street's buying the dip like mad.
Pretty wild. Well, that's all the kind of the news stories we wanted to go over in the charts. We just focused on Bitcoin and ETH because obviously they're down bigly, and a lot of the alts are just blundered as well. Pulse Chain is doing okay. PLS is up 0.05%. PLSX is up 3.4%. Inc. meanwhile down 8%, and Hex down only 0.44%. We also know that ProveX, the new platform there, I don't know if you saw it. We'll show this before we get Smart Sentinels in the house here. Look at this. Remember when we were talking about it had the big run dip, and we're like, oh, wow, it's consolidating. Look, this isn't Richard a scammer, whatever. Well, yesterday it absolutely exploded. As high as I think like 200 million market cap. It's up to 144 million, dipping with the market a bit. But so far, so good for ProveX, and that does help the other Pulse Chain assets. It helps the, perception of Richard Hart himself, and we'll see if there's any kind of continuation here. Obviously, I wouldn't be chasing this. This can consolidate all the way back down to like the $83 million level, maybe even this $80 million level to find support. But again, pretty nice to see alts launching, having the sell-off, finding a base, and going up, rather than launching, dumping out, finding a base, and going down. This has been a long time in the making that we've seen altcoins actually do the consolidation and break upward rather than the consolidation and downward due to market dynamics.
Maybe this is a harbinger of things to come. Alt season, perhaps a little taste of alt season. Wow, alts can go up. New altcoins can go up, guys. It can happen. It's a thing. Hasn't happened in 5 years, but maybe we're right around the corner. So happy for anyone who sacrificed to ProveX. I'm happy for Pulse Chain, and hopefully that brings in some new buyers and some new holders into the ecosystem. We'll have to see. So just circling back to this discussion around the big, beautiful bill, I wanted to get the numbers right. This prediction here from Americans for Tax Reform, predicting that a total of $121 billion will be refunded to Americans through the big, beautiful bill. And the average size, the check size, I guess we'll get from the government, or the refund amount, $3,800. Pretty damn good. I mean, who remembers when they gave out $1,200 checks during COVID? What happened to our beloved risk assets? To the absolute moon. So, will history repeat? I don't know. Probably will rhyme. Probably will at least rhyme. And we'll start to see some improvement on the overall economy. We'll start to see improvement to our risk assets. And then furthermore, once the stimulus from the big, beautiful bill, because that'll get spent, right? These things don't last forever. So maybe we'll get an economic expansion for 3 or 4 months. Well, that then brings us towards the end of the year. Powell's going to be out. Kevin Warsh will be in. And despite all the noise right now because of oil prices, I think there's a pretty damn good chance Kevin Warsh ends up cutting rates pretty substantially because they need to do that to refinance the massive debt that we're in, $40 trillion in debt here in the U.S. Sort of a mind-boggling figure there. So I think there's a world where it all works out. I know the bears and the pessimists are thinking World War III and $150 a barrel oil forever. Us optimists are looking at the world a little differently, and that's why I'm feeling good right now.
Yeah, I just wish the timeline could be pushed forward due to if the Iranian war would have been ended rather than escalated yesterday, that would have helped a lot. And if we would have had interest rate cuts, that could have helped a lot. So I hate that it just keeps getting pushed off and the macros that are building continue to build rather than starting to fall into place. Remember, there is some things around the SAVE Act and the Clarity Act that could be finalized by the end of March, along with those tax refund checks coming. So again, we're not to the end of March yet. If you can get the store where you get the SAVE Act, the Clarity Act, the war ending, all before the end of Q1 2026, I think we're still very well positioned for higher prices in not just Bitcoin and Ethereum, but all altcoins, all risk-on assets in the financial markets in general. Meaning if you are an asset holder, you own assets of any kind, the values should go up if these macros continue to play out.
I like being pre-rich better than being actually rich. So yeah, let's just indefinitely be pre-rich.
Stop
it's so great to be pre-rich, guys, because more money, more problems. Just remember that.
Yuck.
More money, more problems. And so if you're actually rich, I mean, that's going to be a big problem.
Money doesn't buy happiness until you have money. That's why I hate that saying. Maybe there is a level, you know, they've done a study, and once you get to a certain amount of money, you don't get any extra happiness off of it. But I guarantee for 99.9% of people, if you handed them $100,000 or you started giving them $5,000 or $10,000 extra dollars a month in set income, their happiness will go up just because their cortisol levels and their stress levels go down. And that's why I hate the saying, money doesn't build happiness, because I think it really does. In this world, it takes money to pay your bills. Even if it's enough money that you don't have to worry about bills anymore, just human biology is going to tell you cortisol down, stress levels down, happiness and dopamine up. So I think science disagrees with that stupidity, and anybody who says that is somebody who never had money.
Yeah, I'm afraid you're right. I'm just trying to give some positivity to all the pre-rich viewers out there. Hang in there, folks. Hang in there. The market can turn around, does turn around, will turn around. Outside of what you just described there with, okay, having more money, reducing stress, that's all true. The other thing I miss about when crypto does well, just kind of the fun of it comes back. Like the euphoria, the community start to come back. You start to meet new people. Spaces are packed with new cool people. Your assets are going up. You're feeling good. You're looking for new investments. You're looking at the positive side of crypto. You're saying, oh, wow, this tech can change the world. Now, some of it might be nonsensical, but that feeling of euphoria, we haven't really had that. I guess we had that a bit during meme season, but man, even that feels like ages ago. And also wasn't that fun because you kind of knew in the back of your mind that this is a little bit silly. We're all like out here, you know, cheering for some like cat PFP or whatever. And, you know, no one's talking about tech or change the world, but here we are. So even that was a little bit left a sour taste in my mouth anyway, as kind of a crypto OG who much prefers utility plays. But in any event, I miss that euphoria, even if it's like not even setting aside the, okay, I'm rich versus pre-rich. Alt season, man. The glory days. We needed to come back.
Talking about euphoria, alt season, new opportunities. Are we bringing on anybody from Smart Sentinels today and talk about their project?
Yeah, let's do that. I'm going to share the link. But before we do that, there's one final story. I don't know if you have it pulled up around the SEC essentially putting out new guidance that preempts the Clarity Act in many respects. SEC has now put out new guidance saying what is a security, what is a commodity, how does an asset evolve from security to commodity, and it is extremely bullish if you are in crypto. I'll give you guys just the high-level breakdown of this new guidance that came out. This is the law of the land now, folks. Now, could it be overturned by future administrations who bring in some asshole SEC's commissioner? Yes, and that's why you want it passed into law through Congress. That's why you want the Clarity Act. But this basically preempted the Clarity Act and said almost everything in crypto is not a security. Memes not a security. NFTs not a security. Decentralized networks, all the big ones. They named every single big one, every single big L1, not a security. XRP, ETH, Cardano, Solana, Bitcoin, obviously. The only thing that are going to be securities really under this new guidance is tokenized security. So if you tokenize a Tesla stock, obviously that's a security. But then also some early stage projects could start out as a security and then they can evolve into a commodity. But basically what I think this means, does this bring back some more innovation and risk taking and new utility plays? Because now developers who maybe were once scared of the SEC coming after them saying, hey, we're safe now. We can now play around with new tech, new interesting ways to build a token which can provide benefits for the holders. And we don't have to worry about, Gary Gensler coming after us. Does this potentially spur on a new utility season? What do you think?
Well, I think a lot of people were kind of assuming this under the new SEC, but this is nice that they laid it out like this. This is very bullish. If this happened in the bull market, everything would have seen 10 to 20% rallies in a day.
True.
The other thing, too, is it might bring back the DAOs, the application of DAOs. Obviously, we have the Surf DAO. You have PTGC as their DAO. There's many projects who have governance tokens. And really, it lays it out right here. That would fall under digital tools, tokens that can be used to access or operate blockchain app-based applications, or can be used for gatekeeping on the more thorough breakdown definition. And by definition, what is the Surf token for the Surf DAO? Well, it's really just a gatekeeper to get into that private group and to utilize that information. So I think a lot of DAOs fall under digital tools as well, which would then be a non-security for that utility token as well. So I think this opens up the door, like you said, that virtually everything in crypto is no longer considered a security. And really the only people that need to play by the rules are if you're actually digitizing a security or some kind of ownership of an asset like a Tesla stock, or if you are a stable coin itself, you need to follow the regulatory guidance for stable coins in the backing of that stable coin. Otherwise, you can just call yourself a digital tool, a digital collectible, or a network itself, which makes you a digital commodity.
Yeah, man, it's massive, I think, for this industry. And you're absolutely right. If this was happening in a bull run, you'd see all the big ones. I mean, if they, Solana definitely not a security, Cardano not a security, Avalanche not a security, blah, blah, blah. You'd see double-digit, green candles just on that news. But sadly, we're not really in that phase of the bull market, are we? Where it may be the sort of the climbing up out of the depths of the bear market phase. So it is what it is. It is what it is. But I think very, very bullish overall. Everyone should be rejoicing and cheering. And with that, what's going on, folks? What's going on?
Hello,
Welcome to the
how's it
show,
going?
guys.
Thank you for having us.
Hello, thanks for having us.
I think, Darius, you got a little bit of an echo if you want to turn off the live stream because we can hear us through you, and then we are good to go.
Yeah, you're going to want to do that. Also, maybe you want to turn on your camera. I'm not sure. All right, guys. See, this is another example of how the bull market's coming back. Projects are building. Projects are looking to get active on the marketing front. And with that, we're very pleased to have the Smart Sentinels team join us today. We're going to be talking about their project. We're going to be getting to know these guys a little bit. This is a project backed by Pools Ventures, which is kind of the venture arm of Pools, the launch pad that we're a part of now. So very pleased to have you guys on the show. By the way, thank you for watching us and chiming in on on the public chat. It's so great to see that. Before we get into Smart Sentinels, how are you guys feeling about this market right now? Are you guys worried? Because you're from Europe, right? Are you worried about the war lasting much longer and oil shock and inflation, all those horrible things happening, or are you guys looking at things a little differently?
Well, to be honest, regarding the war, yeah, we are in shock. And regarding also the inflation, this affects us. However, in terms of market sentiment, I'm doing fine. So me personally, I think we are in the best phase to accumulate. It's a diamond bottom pattern right there on the charts. Institutions are buying, Michael Saylor is buying. So right now it's the best consolidation phase and the best time to buy. This is my personal opinion.
Love it. We've got another bull on the show. Another bull. It's funny, talking to the Europeans have a very different take. And obviously I get that because For the most part, I don't think Europeans were worried about Iran, killing, American soldier or European soldiers or something like that. So they're like, we don't have a big skin in the game here with this fight, but yet we're impacted by the oil prices and this and that. So I do get the European perspective, but fact of the matter is this, the world's interconnected, so everything does affect everything else. But happy to hear you're bullish, Darius. Any thoughts on the market before we turn over to Smart Sentinel stuff?
Yeah, thanks for allowing me. I hope you can hear me well now, and there's no echo. Yeah, exactly what my brother has just said about the market sentiment and so on, and also my personal thoughts is that the shift towards AI is happening. It's unfolding as we speak. So yeah, us being an AI project, we're really happy and really looking forward to everything that is going to come next, and more likely it's going to be in a very, very positive way.
Yeah, I
Yeah,
mean,
I
we're
mean,
very big proponents on AI and what we think it means, not in just the traditional markets, but in the crypto markets. You got CZ talking about AI agents. You got
Exactly.
Brian Armstrong talking about AI agents. You got traditional market participants dumping tons of money into AI companies. And now here comes Smart Sentinels, which what looks like a good time at a near bottom in the market itself, looking to launch its AI agent and its AI platforms. And we just want to kind of get on here with you, get a 1,000-foot overview of what Smart Sentinels is doing. Is there going to be a token? What's the launch plan for that token? And how can everybody here get involved? And why should we get involved with Smart Sentinels, whether the platform or the token?
So yeah, we are basically building a decentralized network of AI agent. We are tokenizing the work of an AI agent. This agent can be whatever. It can be an image generator bot. It can be a chat bot. It can be an agent that helps you coding. It can be an agent in healthcare, in legal, in whatever the industry and whatever type of AI agent, trading agent also. You can basically add this agent to our proof of useful work network, and this means every time this agent is working, is doing a task, or it's trading, whatever, it will generate the Smart Sentinels tokens, and the NFT holders from the collection tied to this particular agent will get the Smart Sentinels token as a reward. This is what we are doing. People will be able users will be able to create and deploy these agents, deploy them in the form of an intelligent NFT where metadata of the agent contains the device it is running on, the model file that it is running on, having the IP rights of the agent. They can basically tokenize the agent and the work of it, and on the future marketplace they can do whatever, sell the agent, rent the agent, and let other users that hold an NFT to get these rewards every time an agent is working.
Very cool, man. Yeah, I think AI agents, just generally speaking, going to be a huge winner. This sector is going to be a huge winner in the upcoming bull run. Everyone's talking about these AI agents. The best devs are building out ecosystems like Smart Sentinels, deploying AI agents to perform various tasks. What I like about what you guys have done in particular, I understand there's a network and anyone can build an agent and deploy an agent on the network, but you guys have kind of gotten out in front of that and said, okay, well, we're going to deploy specific AI agents that we think will have product market fit and generate revenue for us as well. So kind of a hybrid approach where you have the network, but then you also have the products itself. So talk to us about a couple of these products. I know you got the healthcare one. The one that's interests me a lot here for the crypto space is your AI agent that audits code. I think that could be a big winner. Can you talk a little bit about that? What's the potential for that, and what it may mean for token holders as well?
Yeah, well, we believe that having a legitimate business behind the token will strengthen the power of the token. So this is why we have AIDA, the healthcare agent, that it is currently in testing phases in our first pilot medical office in Romania. And yeah, regarding the audit, the AI auditor agent, it is trained basically on the same security layers that Certic or Hacken uses, and it is also context aware. So we have basically automated what Certic or Hacken is doing for a fraction of the time and a fraction of the cost. It is trained with all the Ethereum registries and all 37 smart contract witness classifications. What a manual auditor from Team Certic or Team Hacken is doing, we have that automated, and it is. I'm quite proud of the training of this agent.
We are, especially about the context-aware phase, because as we know, I mean, I'm not sure if anyone knows, but other tools like Solidity Scan are often offering false positive results when when auditing a smart contract. And here, with our context-aware tool, we are basically removing those false positive results.
Yeah, I
So
mean, I
yeah,
see that product as being massive, having a massive potential market, right? Because if you go to a Certic or a Hacken, I don't think they'll quote you anything less than like $10,000 minimum.
Exactly, five
You know,
figures.
up to 50 or even more, depending on how complex and big your code base is. So, you know, to drop that to a fraction of the cost at, you know, 1/10 of the time, because you could be working with Certic for 3 months before they actually get back to you with the proper audit, you know, being completed.
Yeah, been there,
So,
trust me.
I mean, and how many projects out there? There's probably at least 1,000. Obviously, I know a lot of the markets change and memes and stuff, so they maybe are not your target audience, but there's enough utility projects that are building real tech that would love to utilize an AI agent auditor over spending 10 or 20,000 to get a human auditor. That's, you know, my opinion anyway. So very exciting product that you guys are building out. I want to shift gears a bit and let folks know of the investment opportunity. Not financial advice over here at Crypto Paradise as always, but when you see a good investment, sometimes you may want to jump in. So we're working with these guys through Pools Ventures to fill out their seed round, private round, public round, of course, and ultimately launch the token in the next, I don't know, few months here. The seed round opportunity is very exciting. Open to Crypto Paradise DAO members and Pools Council members. It's going to be a very small round of $50,000 total being raised in that round. You're going to get a free NFT with it, which is a yield-bearing product. And it's a $2 million valuation at that seed round. And the token itself is going to launch, I believe, at a 10 million valuation when it finally does launch. So that's pretty good opportunity there, I would say. Now, of course, we all need a little bit of dry powder. We all need some capital to invest in this stuff. But I'll just harken back to some of our earlier projects that we invested in a couple years ago with similar structures, like really juicy seed rounds. Those did incredibly well for us. So I'm looking forward to replicating that with you guys. What is the what's the general launch plan? If you can share with us there, any partners you want to name drop here, or any plans you can name drop to get people excited about the upcoming token launch?
yeah. Well, regarding partners, I would like to shout out to our partner, The Miracle. They are doing a great job in terms of campaigns. Their campaigns in MetaMask and Solflare wallets has a very high reach of users. So you are doing a great job, guys. Thank you for having us as a partner, and we hope to collaborate long enough. I would like also to thank Vibes Fund for putting their trust in our AI agent that audits contracts and their future tokens that they are launching. And also Pulse Ventures and Crypto Paradise, thank you for backing us up. And in terms of launching, as you said, we are opening the seed round soon enough, followed by the private sales, where we do have also some open discussion and ongoing discussions with lots of big names in the crypto space. After the private sales, we will have the public sales on Pulse Finance. We do have ongoing positive discussions with ChainGPT, HyperGPT, and after the public sales are done, we are going live with a liquidity pool on PancakeSwap, with aggressive marketing on CoinMarketCap, CoinGecko, DexScreener, DexTool, and so on. After that, we do have already two centralized exchanges secured. One would be BingX, and the other one would be MaxC, where we are going to be listed, and they will also help us in terms of marketing and market
Marketing, yeah.
data.
I guess in best case scenario, what is kind of the launch timing for Smart Sentinels? Not so much the products, because some of them are already in live or beta, but for the token itself.
Yeah, well, I'm I'm quite optimistic, and I would say like in the following 2 to 3 months, all of this would happen. So all of this would happen. The seed, the private sales, and the public sales, and also the campaign that we are trying to get a campaign from the miracle to correlate all together with this action in this joint effort to get the maximum effect in terms of exposure.
Well, I'll tell you what, I mean, in a bullish market, people will be jumping all over Smart Sentinel because the token economics are excellent. I mean, very low FDVs, very, very low market cap to start. I mean, once retail comes back, a project like this, 10x is absolutely in the card or more. So, it's kind of one of those things that you obviously need the market to cooperate a bit. But man, once things get a little bit more bullish here and people get a bit more risk on, I think they're going to love something like Smart Sentinel. Fundamentally, very strong project. Already has multiple products launched. Token utility going to be present on day one. NFT is going to be generating income for the holders. Solid launch plan with great token economics. I mean, we just need the market to cooperate, and I think this can do very well. So hopefully, we get a little bit of a turnaround start to an alt season. I think you guys have big potential. We just need the market to cooperate with it.
Well, in terms of market sentiment, in the near future here at Smart Sentinels, we will not be interested of the sentiment if the market is bullish or bearish, because we will have agents working and generating revenue. This has nothing to do if the market is buying or it's so the people are buying or they are selling. AI agents will work, and users only by holding an NFT tied to that agent will get revenue each time the agent is working. So agent will work regardless of it's a bullish market or it's a bearish market.
Exactly. I mean, everyone uses AI agents these days. I mean, I'm sure anyone here listening has used ChatGPT or another tool similar for a specific task.
Yeah, I mean, I like projects that have kind of a bear market or bull market can do well because the product is going to be generating revenue in either settings. So I think that's solid. Yeah, I mean, I think the category is great as well. You mentioned, a lot of people are using AI agents. I think that's going to continue to just grow and explode.
Exactly.
The other thing I'll mention too, it's interesting to see. I mean, just kind of taking a step back, a lot of people are very, I think, bearish about AI in terms of like taking jobs. You see these news articles and talking heads on media all the time about how it's going to take our jobs, and I'm sure there will be job losses and so on, and it's not great for everybody. But it's on the other hand, it's kind of cool to see how productive teams can be now, relative to. I mean, we've been helping early stage projects for years and years to build what you guys have built, and there's many projects like this, complex, very impressive tech. Used to take a 15-person engineering team, can now be done with 3. And that means for investors, projects that used to have to raise 5 million can get by with 2 million. More upside for investors at that point. So I don't know. I think I'm looking at this AI revolution. It's not all bad, but what do you guys make of that in terms of AI is going to be stealing jobs? Is it going to make us more productive? Is it on a whole a net positive or a net negative?
Yeah, Elon Musk said in an interview with Yahoo Finance that
That's exactly what I wanted to just
the
say.
governments need to think of a way to get to people some dividends based on the work of AI. And this is exactly what Smart Sentinel is doing. We are letting the AI agent work and letting users get these dividends in the form of rewards. And this is exactly what we're doing. So yeah, in terms of the jobs, it's sad. People perhaps will lose their jobs, but they do have an alternative of actually owning a fraction of an asset, like a tokenized AI agent, and earning dividends from that agent while it's working. So there's a problem, and we came with the solution.
We came with a solution, exactly. We have a fix for that, exactly like Elon Musk have said a few months ago, I believe, a month or two ago.
Yeah, it reminds me of I was having this conversation with my friends. oh, AI is going to take my job, blah, blah. And that may be true, but I think then the only option, because I don't know if they're going to hand out, universal basic income or dividends, but get invested. Get invested in some of these AI companies. I don't know, whether it's Smart Sentinels, like low cap crypto thing, or just get NVIDIA stocks. Like, you have to be invested in this AI revolution, because let's just assume that, a lot of the worst fears come true, jobs are lost, so on and so forth. Certain companies are going to be massive winners in this, right? So you kind of want to position yourself to be a part of that uptrend. For anyone who's not invested in the stock market and doesn't have any shares of NVIDIA, I mean, I would get yourself a couple shares, maybe more than a couple, because I think there's going to be some big winners here when it comes to AI, even if it means there's going to be some losers too. So it's just the nature of capitalism, guys. It's not always fair. You kind of have to get out in front of the trends, position yourself, and then you can mitigate some of the potential downsides.
Yeah, exactly.
All right, boys. Great stuff. I'm glad you were able to jump in here. We will be doing some more content with Smart Sentinels as they move, through their seed round, past that, and as towards the token launch. So you'll be hearing more about Smart Sentinels through Crypto Paradise, through pools. Definitely give these guys a follow on X. They're very active over there, active on socials and their Telegram. So you love to see that from an early stage project. Appreciate you guys jumping in here. I see we lost Nick along the way. We have a fallen soldier. That's okay. I'll say goodbye.
Thank you.
On his
Thanks
behalf.
for having us.
Thanks
Absolutely,
for having
guys.
us.
Appreciate your time. Appreciate your time today.
Likewise.
Thank you.
Take care.
And until next time, guys, we'll see you on the beach.
See ya.
Bye.